Good morning, traders and investors. Roger Scott here, senior strategist for Trading Pub. That's right, Trading Pub. Now, you might have noticed that the website where I post these videos, it doesn't say Wealth Press anymore. It's now been rebranded as the Roger Scott YouTube channel. So please, if you visit there, comment, post comments below the videos, like our channel, subscribe to our channel. Most importantly, subscribe to our Telegram channel. Go to rogerscott.com/Telegram. Subscribe to the Telegram channel. And don't forget my VIP room today at 11 a.m. Eastern Time. Day trades, swing trades, options trades, all the goodies. It'll all be there in real time. Now, let's get into the good stuff, right? So as you can see here, the treasuries are down. This route appears to be coming down. We have Mr. Jerome Squirrely Powell speaking today. And I believe this gap is going to fill in. Technically, this little pivot here looks like it doesn't want to go higher. We've built a fairly reasonable resistance here, and the RSI is really overbought at this level. We've had a big gyration. I think the Fed is getting ready to sing a different tune, the tune that says we're going to have to raise rates again. But again, I think Powell is going to say today, we're going to wait and see. Things are not coming as fast as we want to. We may have to raise rates, but right now we're in a wait and see pattern. So that's what I believe will happen today at the announcement. It's going to be pretty important, and let's see what time it happens. Actually, I don't even know what time it happens. I try to tune Powell out, which is ironic, right? Because, so here, 10:05 a.m., and consumer sentiment is happening at 10 a.m. So again, pay attention. The market may, about half an hour after the market, you may see some volatility, and you may see some movement in the bond market. Now, today we have almost a reversal of what we had yesterday. If you recall, the Nasdaq was up about 100 points yesterday, and at the opening bell, and the Dow was down. And I warned you. And if you haven't seen this, watch my video from yesterday. I explained to you that this is what it means to watch the market from a broad perspective and not just focusing on one thing. The market was up yesterday because of NVIDIA, and NVIDIA, just kind of give you a little update of what happened yesterday. NVIDIA opened up, let me just go through this with you. There's a learning exercise here. There it is, extended hours. Let's go to 5-day. Okay, so NVIDIA was opening up right here, looked to be opening up here. But when I saw this trading action, I saw that it gapped from 519 all the way to 496 during the night session, which means there was a lot of sellers. And then again, it tried to rally, and then there was a lot of sellers. Now, the stock looked like it was going to be a bullish stock, because if you looked at the chart, you would have seen that it was up from 470 to 510. But if you looked at the chart, you would have seen these gyrations, and you would have seen that it wasn't trading near the upper end of the range, which means there was a lot of sellers in the night session. And that had me really worried. So we put a bar right here below at the 495 something, 495.86 level. And I told you guys that I think NVIDIA is going to go south, and it did. And it broke from 496 all the way to 470 yesterday. So, and it closed on the low, and it's down right now. So it was a complete reversal. And if you look at it intraday, it looks like a complete reversal coming down. It shook the investors out. It shook out, cleared out all the buy stops here. Now it's taking investors out. But this was one of the biggest algo traded stocks yesterday. Now, usually I give you individual sectors that have been hit by algo. But I'm going to tell you, this week was different. It was very different. You see all these wide bars, S&P 500, the QQQ. Well, if you look closer, you'll see that most of these sectors have these big bars. And unfortunately, most of these sectors got hit hard by algos. The biggest ones, if I have to tell you, it's the technology sector. It got hit by algos. The communications sector got hit by algos, and the real estate sector. But if you look at every sector right now, look at this, downdraft. It looks like everything's ready to break down. The only thing that looks semi-stable, and I'm going to say semi-stable because I really mean semi-stable, it's still breaking the main trend right here, is the energy sector. So there's just really nothing to be excited about in the market. And as I mentioned before, if you look at momentum levels, and I brought this to your attention earlier this week, you will see they're not increasing, they're declining. See that? And I think we're going to go lower. Let me show you on a longer term basis what I mean. Here's a 5-year chart, and here's where we're at. Here's a 1-year chart and where we're at. But we need to come down. We need to come down to these levels. We're not down enough. So to me, it looks like the market has more downside to go. And if that's the case, there may be a good argument to say that the bond market is going to stay depressed and back down, because if it goes up, that'll relieve pressure on tech. It doesn't look like we're getting any relief. It looks like we're going to get more pressure. So I think we're going to come down. If I was a trading man, I would wait for the Fed. And if after the announcement, the bond market is still here, it's going to, I don't think it will be. I think it's going to move. But I think if it's still here, you may want to short it, because I think it's going to come down all the way to the bottom and break the low. I think the bond market has more downside to go, because I think the Fed is getting ready to take action again. Dell Computers has earnings today. The stock is looking fantastic. I mean, fantastic. I don't know if they are coming out before the opening bell, probably after the closing bell, but I love the way the stock looks. Keep an eye on it. It's a tech stock that's bucking the trend, and it's looking really good. Now, the irony is, and you want to pay attention to what I'm about to say, is it's actually much easier to find good stocks when markets are doing this. When markets are doing this, everything looks amazing. Everything looks great. Everything is making 52-week highs. Everybody's a genius. But when markets are sagging like this, it's really easy. All you got to do is go to 24-week highs, for example, and look at all the stocks that are breaking out. So again, it's much easier when the markets are down, because you've got the natural divergence thing going on. Now, in terms of sector strength, energy, healthcare, I don't know about utilities. I would be careful with utilities, but energy and healthcare. Energy and healthcare, retail is doing awful. Home builders are doing awful. Technology and consumer discretionary is not doing all that great right now. Now let's talk about global economy, and I'll tie everything together, and I'll even give you a day trading stock. And remember, like these videos, subscribe to my channel, right? I'm only going to be posting videos there right now. It's going to be the Roger Scott channel. And send me emails. Send me emails to support@marketgeeks.com. I can't wait to hear from you. And subscribe to our Telegram. And remember, at 11 a.m., VIP room, where we go over this in more detail live. And I give you hot stocks with options. So market participants are waiting for Federal Reserve to speak today at 10:05, about 35 minutes after the market closes. The Dow is now at a 6-week low. Dollar Tree tumbled. Advanced Micro tumbled. Marvel tumbled. Boeing tumbled. Guess climbed. My cousin is actually married to the son of the owner of Guess in Los Angeles. I don't know why I'm mentioning that, but I just thought it was kind of interesting. The Labor Department reported Thursday showed that claims for state unemployment benefits unexpectedly fell to about 230,000. Anything below, as long as it's not around 300, 275, we're good. Now, here's where you get to the good stuff. I put it in green. Now, listen to the words. And again, Squirrely's probably going to say something totally different. Collins said that the central bank might raise rates further and would likely need to keep rates elevated for a prolonged duration. Does that sound like they're coming to an end? Even if it chooses not to implement another increase in the coming months, they're leaving it open. That's exactly what I said they're going to do. We may need additional increments, and we may be very near a place where we can hold for a sustained period of time, she said. Bullard suggested that a pickup in economic activity during the summer might potentially lead to a postponement of their intention to conclude its interest rate increases. And Harker said that Fed has probably done enough to tighten policy and they should keep interest rates on hold for the rest of the year. Basically, nobody knows, and they're at a wait and see. But here's what we do know. There's now a 20% chance, give or take, that the Fed is going to raise rates. It was less than 10% a month ago, but now it's 19.5. And in November, now it's 41% instead of 20-something percent as it was a month ago. So the higher these numbers get, the worse it is for the economy, the worse it is for the stock market, and they're getting worse. Today, we're going to hear from Mr. Squirrely himself. Consumer sentiment is coming out, really important, but we kind of know where consumer sentiment is based on stock prices. In Europe, mining and energy stocks are leading the market higher. Defensive stocks. China closed lower. What a surprise. Chinese are preparing for lower because of a hawkish stance in U.S. monetary policy with persistent worries about Chinese economy. They're in a crapper right now. Japan closed lower due to steep losses in tech stocks while concerns over worsening trade ties with China. Government data showed on Friday that the core inflation in Japan decelerated in August but remained above its 2% target. And as I mentioned today, you've got Dell having earnings, and after this week, earnings are pretty much behind us. So that's what we got today. Be really, really cautious. I think the stock market is going to rally a little bit as a result of this, but I think that the trajectory is clearly down. This is a nasty arrow. Even if we open up, I think we're going to eventually go down. Stocks have not been holding up as well. Instead of opening lower and moving higher, they've been opening higher and going lower, like Nvidia yesterday. The bond market is putting more pressure on the stock market right now. Now, I'm not trying to scare you. I'm simply telling you exactly what I'm seeing in the market. And you've got energy and healthcare, which are the two most defensive sectors in an inflationary period, rising at the expense of consumer staples, material, technology, all of those stocks. All of those stocks. So again, now over the last week, technology and QQQ have been strong, but it really hasn't been the case, right? I mean, maybe better than a Monday, but this is not happiness. And again, we're coming close on the QQQ to breaking important lines. Now, I know it's Friday. I know you guys have to go. Remember, I'll be live at 11 a.m. in my VIP room. Link is either above or below this video. Before I let you go, let me give you the only day trading stock that I see on the agenda today, and it's Hawaii Electric Industries. They suspended their dividend. On a longer-term basis, the stock looks like it's really bottoming out. Now, notice it's making lower lows here, but notice that the RSI can't sustain itself. Well, I don't know if this is going to happen, and it probably won't, but it happened with Nvidia yesterday. And again, it's not opportunities every day. But if you see the stock rallying back up above the $23 over the next 3-4 days, it doesn't have to be today. It's starting to fill the gap. So keep an eye, put a little buy stop for yourself at around $22.85, 22. How about $23? All right, $23. I want to see the stock trade above $23. If it trades above $23, we're gonna want to make a move on this stock. But again, it may not happen over the next couple of days. Matter of fact, if you see the stock trading above 17.47, you may want to take a little starter position. But honestly, I would like to see it trade above 23. Now, before I let you go and have a happy weekend, I was live with Jeffrey Turnmeyer on Wednesday when he went over his favorite loophole in the entire market. A loophole, that's right, a loophole he exploited with over $213,000 using his family money. And that's how confident he is in his system. The loophole is opening up back again today, but only for a short time. We're going live at 11 a.m. to go over all the details. Click on the link below to save your seat. Take advantage of this explosive asset before the loophole closes. I dare you not to attend. It's going to be a great session. Remember, like our channel. It's now the Roger Scott channel. Subscribe to this channel, like our videos, give us thumbs up, thumbs down. Seriously. And come to our VIP room at 11 a.m. today, and I'll see you later. Have a great weekend. Bye.